You are now listening to The Big Trade with Peter Pham, enlightening conversations for maximum market returns.
I'm here with Tom Ruby. It's early morning Asia time. The financial markets just collapsed, and I've been looking forward to speaking to you about strategy. Maybe you could introduce yourself to the audience, Tom, and we could just dive right into a whole bunch of interesting questions.
Peter, that sounds great. Thanks. I'm Tom Ruby. I'm the CEO of Bluegrass Critical Thinking Solutions. It's a small consultancy, small business, and I specialize in strategic planning, leadership development, advanced analysis, and organizational culture. You know, back in 2012, Business Finance Magazine published an article on spotting bad strategies within businesses, and the number one was failure to get a good external look at your business. That's what I try to provide to businesses. I try to provide people with a good external look and teach CEOs, small businesses, medium-sized businesses, especially, about critical thinking and strategy.
Right. So Tom, earlier we were just speaking offline about my spending a lot of time here in Vietnam. And one of the things that many people don't know about is, I'm not sure if anyone's actually checked the historical track record of wars and victories for Vietnam, but you'll notice that going all the way back to the time of Genghis Khan, if you actually take a look at a world map of the countries that he's actually managed to conquer, Vietnam is actually excluded from that map. And then when you take a look at China and the 1,000-year war that Vietnam has had, that's also very compelling. And watching some of the strategies that the Vietnamese military has implemented, clearly you've also seen that with the Japanese, the French, and the Americans. I cannot think of a country that has fought this many world powers in such a period of time, and still to manage to have somewhat of an infrastructure is absolutely incredible. And, you know, I was telling you about my experiences here in terms of business and dealing just with the local layperson and how strategic they are. What are your comments or thoughts about this?
Well, I was just, I think that the low-level businessman in Vietnam probably understands strategy better than most CEOs in the Western world, and that's because of limited resources.
Right.
People there have limited resources, and any small businessman that's starting anywhere in the world with finite resources has to think about the end that they want to achieve. Okay, and so on one hand you have means, and on the other hand you have the ends, and strategy is what links them together. Okay. And we don't understand that very well in the West. We used to understand that. We used to teach that, but it's fallen off these days. And even in places where they do teach that, business schools and war colleges, people read it, they pay it lip service, and then they go do something different.
Right. Right. When thinking about the geographical component of Vietnam, even if people were to divide it amongst various different subsections like the North and the South obviously has more resources because it's a much more tropical climate. You'll even see that it's arguable in terms of stereotypes is that the North people are that much more savvy, and they tend to do much better in terms of academics and even in terms of strategy. In fact, many people don't know about this, but when people refer to the wars of the past, it's primarily the North that was strategically winning these wars against, say, the Americans and in terms of the Chinese, because they're right at the Chinese border, actually. So one of the interesting things that I've experienced was I was just sitting here about a week ago with a business person, very local business person. And we're actually getting my book, The Big Trade, Simple Strategies for Maximum Market Returns, translated into Vietnamese. And he was just telling me, Peter, you're a success story here. And sometimes I don't perceive myself as one because probably my expectations of what success is considered is probably different. But he was actually saying the fact that I've been able to operate and do the things that I've done here is enough of a success story that merits worthiness of discussion. And then having spoken to you just like right now about all this stuff, it kind of gives you context because it's actually been, there's been a lot of ups and downs, but in this period of time, I can see our business and I can see myself as an individual evolving and learning things and doing things that I've never thought I would do if I was in the comfort and the confines of, almost like a social welfare state like Canada at that period of time.
Oh, amen. There are people, listen, why do 80% of restaurants fail? It's very hard to make it in that business, okay? And you'll get people that say, well, I'm a really good cook, and I really love cooking.
Right.
But they love cooking in their own home, okay? They love cooking in their own home, and it's a hobby, but when it becomes a profession, when it becomes a job, okay, right, you have to make money on, these are people that don't think to themselves, well, do I have a supplier that's going to be able to get me what I need for my specialty dishes 6 days a week?
Right.
Okay. And that's separate and apart from being able to cook well. Okay. You can make the best pasta around. Okay. But are you trying to do something are you trying to open a pasta restaurant in town that's had a pasta restaurant established forever? Mm-hmm. Okay. Are you trying to open up a specialty restaurant in an area that's going to require you to get certain specialty foods that you're going to have trouble getting from a supplier? Is your traditional idea of taking weekends off good in that restaurant business? Right. You might count a Wednesday night that you need a Wednesday night in your business, but you're in the South and people go to church on Wednesday nights.
Right.
And so you have to take a lot of these things into account that people really don't think about when you're connecting your ends to your means.
And Tom, I guess going back to what you're referring to about in terms of limited resources, does that invoke something within our minds to have to think about those aspects or try to even address those things at least mentally before we even jump into a particular action? You'll see, I guess, in the West, many people try to jump into businesses without that much thought, actually.
Sure. And okay, so what's the greatest lie that's been told over the last 50 years in the West, but especially in North America? I mean, it's not really a trick question. What's the greatest lie that's been told to people over the last 50 years in North America?
That the government will protect you in times of danger? That's a guess.
Maybe that should be the second one. I would say that the biggest lie is that you can do anything you put your mind to. Okay? If you want it badly enough, you can do it. Well, the fact of the matter is that you and I probably aren't going to be NBA players.
Right.
Okay? The fact of the matter is that I can't be the president no matter how much I put my mind to it because I wasn't born in the United States.
Right.
Okay? There are lots of things that we can't do no matter how much we put our minds to it, no matter how much we put stickies over our mirrors. All right? And so we have people that have this idea that because, in the West especially, if you just work hard enough, you can make anything happen. Well, that's really, really not true. If you don't have the training, if you don't have the background, if you don't have the resources to do something, you can't do whatever you want. Okay? And it's not like the movie, it's not like, what's that Kevin Costner baseball movie where they say, if you build it, they will come. Field of Dreams.
Yep.
Right. So there are lots of things that, if you build it, people just won't necessarily come. And other times they will. Okay. You have to really, really think things through. And people are constantly coming up with great ideas that don't go anywhere, right?
I guess the question for you, Tom, then is my interpretation of that effort interpreted as like passion, and isn't that what people refer to when they're referring to hard work, is getting through all the ups and downs or trying to achieve those 10,000 hours to get to where you ideally want? And maybe I'm a little bit more objective about this, but say I've identified a target. Say my objective was to be Michael Jordan. Perhaps I might not ever be Michael Jordan, but my best efforts and my best attempt will get me in some kind of like D League. And isn't that what people mean by, trying to achieve whatever it is that you want to achieve?
Yeah, I think in a lot of ways that really is. I mean, there's a great story that you can look up on YouTube of a guy that was 5 feet, I think 5'2" tall, and he taught himself how to dunk.
Right.
And seriously, you can look this up, and it's just a great story. What he did is he went and found Russian powerlifters, okay. and he did their weight training until he built himself up to where he could get his legs strong enough to get up and dunk a basketball. Right. And so that was a great goal, but that was a fairly, I don't want to call it a simple goal, because in my 50s, I can't get up and dunk a ball today. Right. I'm not physically capable of doing that anymore. But what does that have to do with business and investing and strategy? Okay. He had an end that he wanted to achieve, to dunk a basketball. Right. He had a means that was his body to do it. And he came up with a strategy, which was a way to train himself. He thought it through. He gave himself the nutrition to do it. He gave himself the weight training to do it. He spent the money that he had available to go get the training to do it. Mm. And then when he dunked, he was done, and he was happy. Okay. You can't stop when you just dunk the basketball once, right? Mm-hmm. You've got to continue to keep going. And so, like the local restaurant that, comes up with a strategy to attain its end, and for 2 months is really doing great. They're packing the place in. Right. All right. They're really packing the place in, but then suddenly, the pizza cook, who is like the owner's father-in-law, he's old and he's tired, and he's saying, I liked it when I was putting up 3 pizzas a night, but now I'm having to do 12 and I just can't stand it anymore, and I quit. Mm-hmm. Did you have somebody else that you can come in to take that over for you? Right. Okay. Right. Because doing it once and filling the place up once isn't going to keep your business afloat. Yep.
Tom, I like to share to you about some, I guess, approaches to tactics that I use that probably overarch into some kind of strategy. And I'd love to get your opinion on this, because first off, this is what you kind of do for a living. But I think it's kind of interesting for the audience to get this perspective, because I get a lot of inquiries about, like, Peter, why are you based here? Why are you doing what you're doing? And coming from a place like Canada, where capital markets are less embraced than in America, America tends to be much more open to people that aspire to manage hedge funds and to be Wall Street kings, basically, right? We're getting there in Canada, but more so relative to the United States. When I spend time here in Asia, especially frontier and emerging markets, I see that because these are still all relatively new markets, that there's so many minor inefficiencies that exist, or aspects that are no longer tapped into or not tapped into because of people's awareness of their own environment. So basically, I run an asset management company here, and we're not the biggest. There's many other bigger asset management companies, but the business models that they run are very much traditional. For example, no one in Vietnam has managed to utilize the internet to the extent that I have. And I feel as if that is a massive competitive advantage, because think about the globalization component of it and the fact that we are able to communicate our message almost, there's a sense of parity that exists. And I always thought that that was very compelling. First off, the minimal capital expenditure required to do something like that. And secondly, its overall effectiveness, because you want to be talking to new people that have interest in different parts of the world besides America. So we've signed distribution deals just recently with like Forbes, for example, Forbes USA, as opposed to Forbes Asia, in which many people have to pay to participate and to provide their research onto some of these Forbes Asian sites. Whereas in America, the business model is very different. You contribute, you get paid, you can monetize that. In addition to that, you can communicate your own message. As you've seen right now, we're doing a podcast, which I don't think anyone does here, but that's not maybe our demographic. My demographic is to communicate to people the world over about some of the interesting and fascinating investment opportunities that exist the world over. And it's actually managed to build somewhat of a relationship between me and the audience. So thinking about this like tactically, strategically, we've managed to build a little bit of a niche for ourselves doing what we're doing. I was wondering, based on, some of your studies of strategists and war generals, if there's anything analogous that you could relate this business model and strategy to.
It's really interesting. You just said something there that might answer your own question. It's almost like you're seeking a different audience.
Yes.
Okay. And so you may be two sides, like two ships passing in the night instead of fighting each other. Okay.
Right.
They have a different end than you have. They
Right.
have a different objective than you have.
Right.
So it's not like fighting them. Okay.
Right.
You're using the resources that you have available to you there to achieve a different end than they have.
Yeah.
They have low leverage of the internet there.
Yeah.
And you mentioned that their effectiveness is that you have a higher effectiveness because you're using the internet.
Mm-hmm.
I don't know this to be true, but it may be the case that they're saying I'm effective enough for what I want to achieve, that Peter is just achieving his minimal effectiveness and spending all of his day on the internet, okay, mm-hmm. because I have a lesser end that I'm trying to achieve. I may be more effective because I'm not spending my day trying to figure out what this internet thing is.
Right, right. But you'd imagine, Tom, first off, our demographic's the same because effectively we work as asset managers that are looking to raise capital for the likes of Vietnam. So it's not going to come domestically. It's going to come internationally, right? And their focus has been in their incumbent amount of clients previously, whereas ours is basically, we're pragmatic to the whole situation. It could be people in Kansas. It could be people in New York, which has actually been less open and susceptible to foreign investing into frontier markets like, Vietnam, for example, or throughout the Asian region. Domestic people tend to invest 70% of their portfolio within their domestic region, for example. So
that's absolutely worldwide. I mean, you know this to be true. You run an asset management fund,
right?
And people everywhere in the world, whether it's a good market or a bad market, invest primarily in their own market.
So there's a lot of things like, we implement, we look at digital marketing, for example, and the analytics related to all of that, which has been actually very effective because I can measure my effectiveness. Marketing has changed a lot where people cannot do that. Whereas now with digital marketing, you actually get the data feedback of the effectiveness of your campaign, which is vastly superior to even traditional marketing, for example.
So you're talking right now about using scientific methods applied to the social sciences.
Correct.
Okay? You really are. Okay, so my wife does surveys. Okay. She does a lot of surveys. And, do you think that Coors did social surveys when they put Zima on the market back in the, early 90s? 70% of Americans tried Zima exactly once, and then never again. And it became a put down to say, oh, dude, you probably drink Zima. Okay. And it was crap. Okay. But today, survey companies do extensive market research, okay, and they spend money on product trials, and they send them to people all across the country to give them honest feedback, okay? Right. So what you're looking for there is the evidence part of scientific methods. You have a theory, okay? Theory is a reasonable explanation on why you think something works, on why something happens. So theory is the why. The hypothesis is the what you expect to happen. So you say, if that's true, what should I expect to see? All right? That's your hypothesis.
Right.
Then you're going out and actually looking for objective evidence. Did that or did that not happen? And you have to run tests. You run tests to try to falsify the hypotheses. All right? And that's what scientific method is all about, okay? And it's, man, you've got to get that part down to do any kind of objective, to find the objective truth. You've always got to question your assumptions.
Yeah.
Something that I give to my clients that I put out on my own website, my blog, is I have a little equation, and I put it out on LinkedIn and my own website that says, what you do every day explained in one equation. And it says on the left side, your activity equals, and then on the right side, the function of, so calculus, the function of A sub x times B sub x times C sub x ... And please, I'm not a math guy, okay, but I know enough. I know enough, to know that here's how this works. A and B and C are variables, and ... means it goes potentially out to infinity, right?
Right.
And whatever your activity is the function of the change in those variables, okay? So the sub x is the value of any one of those variables. So if you change the value of one of those variables, you change the outcome.
Right.
And if you don't know what the outcome is, if you don't know what the outcome is that you want, all you can do is look at the values of the variables you have and then just try changing them and see what happens. If you know what the outcome is that you want, then what you have to do is find the right variables in the right values to make that outcome work.
Right.
That's how you science applicable to economics, to buying groceries, to growing a garden, whatever it is that you're doing.
Tom, this is a perfect opportunity to bridge into something through our correspondence. We were talking with each other, is I think you gradually found out that I was applying aspects of the scientific method to our investing and trading strategies. I think one of the best ways to start this is I heard a fascinating interview question by a venture capitalist named Peter Thiel, very renowned for investing in all these Silicon Valley startups. And his number one question for people that he interviews is, what is basically a controversial truth that you know and agree with that not too many people agree with, but to be the truth? And going to trading and investing, because that's probably the theme of this podcast, is more focused about trading and investing, is that you can actually statistically analyze stock markets without even having to understand the underlying fundamentals of the business, and without even having to use pseudosciences like chart and pattern reading. And going to what you're saying and going to things that we're within your realm is one of the ideas that I'm working with. Is just imagine, if you will, staring at a screen that displays every single statistic and permutation about a particular behavior of a stock price. Very similar to like that of back of a baseball card, where you could see all the statistics about Jose Batista, go Blue Jays. Blue Jays are doing very good this year. So all the statistics that you need on the back of a baseball card, but in this case, understanding about what is the probability that the stock's going to go down $1? What is the probability that the stock's going to go down at all? What's the probability that the stock is going to go down $2? What's the probability that it's going to go up? And I have all those statistics. And what I've been building on is thinking about the OODA strategy, right? Observe, orient, decide, and action. And based on what that equation you just told me about, that I guess algebra or equation that you just mentioned. Yes. That equation you just mentioned to me, the data is constantly being updated depending on the interval, the time interval that you are observing. But if you can get all the statistics and permutations and the probabilities, I think that there's something fascinating about merging the cognitive approach of the OODA methodology on how your mind thinks. But then taking a leap further is connecting that with things like the equation that you just told me about, or thinking about that more profoundly, like in some kind of game theory tree diagram where you understand your move as opposed to that of your opponents, or in this case, as opposed to the markets and the participants within the markets.
So let me ask you a question.
Yes.
Before you to the game theory part, to where you add a second player into it.
Yeah.
Okay. So you say that you've got all the data for all of your variables.
Yes.
How confident are you that you have all the variables that you need? See, this is why the social scientists get so, you have two really divisive camps within social science.
Correct.
You have the quantitative and the qualitative people, okay? And the qualitative people say you can never know what all the variables are. And if you can't know what all the variables are, then none of your answers are going to be good.
Correct.
Okay? Or not going to be accurate. And the quantitative guys say, as long as you learn more, okay, and as long as you can refine the values of those variables, and as long as you can add small variables, even if they add very, very small amounts, then you're still learning more and moving towards a better answer.
Mm-hmm, mm-hmm. In terms of one of the social sciences, like actually the analysis of equities in the stock market, for example, I think one of the monumental truths that people don't really want to accept is that there is only one thing that you truly need to analyze, which is truly the price of an underlying equity or the price of a stock. Now, many people study derivatives of that. They'll understand the underlying fundamentals of the business, and that's a little different. And then there's people that will use different kinds of tools to research price, right? They'll use things that cannot be necessarily back-tested, or they'll use things that are derivatives or deviations to the actual analysis of price, which actually get them in a very subjective approach because it's not precise. Now, what we do that's different.
How do you know that you're not missing and please understand, I'm not going to argue I think your point is really brilliant. Okay. You're boiling it down to a very understandable variable. Not me. Somebody's going to ask you the question. A quantitative methods guy is going to ask you the question, how do you know that price is the variable and that you don't have some very, very significant omitted variable out there?
Mm-hmm. To answer that question, what I state is that markets are not predictive. They are probabilistic. So any hidden variable, for example, or any unique asset valuation, for example, will eventually, if it is discovered, if that price discovery does occur, the probabilities will reflect that. Now, I'll give you a perfect example of this,
That's actually a great answer. Go ahead.
Right. So post 2007, you'll see that the economy and the stock market have actually bifurcated with each other. And anyone that thinks that there's a relationship or correlation with each other is well, they're absolutely incorrect, right? When you take a look at China, for example, the whole run up in equities in China has actually been strictly based on momentum and price that has led the economy. Yes, there's a little bit of stimulus involved, but that's again reflected into price. And if you can just understand the probabilities of Chinese equities going up and then the probabilities of Chinese equities going down, yeah, you can add additional like fundamental catalysts. You can add like, these news variables to it, but you shouldn't deviate your thesis from what the probabilities are indicating. Just like equities that have collapsed within the last few days, even on the US side, I think for anyone to have missed that massive momentum to the downward would probably be relatively dogmatic, because all indications would indicate that equities are going down. Now, this is more from the, professional trader's perspective, but these are some of the principles of the book. So it's interesting that we're talking about this, but I guess from my side, I'd love to even jump into talking about, brilliant strategists and get some perspective from that. We haven't really had a chance to dive that much into OODA, and I'd love to hear your thoughts on Sun Tzu as well.
It's interesting, John Boyd, who developed the concept of the OODA loop,
right,
was he was made a pariah by the U.S. Air Force because he challenged the status quo. And unfortunately, we are very social animals, and people that do that, challenge the status quo, end up suffering. Now, his thinking is taught widely, but his name is never used.
Right.
And so, even at the home of Air University at Maxwell Air Force Base, there's a tiny little driveway that's called OODA Loop. There's even a sign there, a road sign for it. But his was not spoken on the circle, on academic circle, and it's too bad. It's interesting what I said earlier to you about strategists being taught. Boyd is taught, Sun Tzu is taught, Clausewitz is taught. Okay. And you've seen this. Look, you've seen this in your business investing books. I know business people, Harvard Business School, the Fletcher School, they teach Clausewitz. Okay, they teach Sun Tzu.
Right.
But people don't use those lessons. Okay, they don't use the lessons there when they're implementing strategies, and they really do use. And again, I wrote a post about this a few weeks ago called "There is no magic pixie dust."
Right.
Okay, you cannot go and sprinkle fairy dust to make the difficult issues go away. You have to actually think them through. And just because you want the prices to continue to rise, like you just said, if there is an omitted variable, it's going to show itself at some time.
Yep.
Right? Now, you might have a long lead time for when that shows itself, or you may have a very short lead time for when that shows itself, right?
Mm-hmm.
When Bernie Madoff was, listen, how did people know that Bernie Madoff was a fraud long before he was a fraud? Well, his dividends were exactly the same amount every month, right? Now, that struck some people as odd.
Yeah.
It didn't strike other people as odd. Okay, so some people would say, my gosh, there was a sudden collapse. Okay, it suddenly went south, and we had no inclination that this was going to happen. But some people had an inclination that it was going to happen because they thought things through. Does that make sense?
Yes.
Lehman Brothers, okay?
Yeah.
They increased their risk appetite, right?
Mm-hmm.
And what were they doing? They were putting down like 3% collateral on these terrible, mortgage futures.
Right.
And people were caught this wave, and they're like, hey, I'm going to surf this wave like today is the 125th birthday of Duke Hanamoku, right? I'm going to surf the wave like Duke Hanamoku. and others said 3% collateral on housing futures for people that shouldn't have gotten these loans in the first place.
Right.
I'm out, and they made a ton of money on it.
Introspectively looking into all of this, especially now of what's currently happening at this very moment, is that, what's fascinating about financial markets is that there are these fantastic windows that are open for the astute strategists to come in and capture and reap the advantages of massive credit and cash that it's at relatively low interest rates. It's only after there's a big crash that happens then that people complain about like the moral hazard component. But when I think about these opportunities that exist, you have to be like boldly thinking about and positioning your portfolio or your assets in a manner that allow you to exploit all of these opportunities that exist. And you can't be too greedy to complain if there's a 5 or 10% correction in equities, especially considering they've reached all-time highs after this last several years. So I just think it's almost like an approach of thinking. People want all of these regulations, which actually sour the next opportunity and way. People say, well, 3% down is terrible. Yes, it is. It can be. But if you know what you're doing, and not everyone knows what they're doing, unfortunately, it creates a great opportunity to create wealth for someone that doesn't have wealth to begin with. And that's one of the tragic things that I'm seeing happening in financial markets the world over. It's becoming rolled up into like bigger institutions where the little guy is unable to basically implement small, minimal capital investments to achieve great milestones. And hence, that's why I think one of the important things as this window is slowly closing the world over is for, smaller entities or medium-sized entities to think about how multinationals have structured themselves in a tax-efficient manner, in capital flow manner that allows them to benefit and provide the financials and earnings that they've demonstrated over the last several years. Many people talk about the low interest rate environment. Well, why isn't that you are striving to be as close as possible to the central bank to obtain that same amount of capital that the likes of, Lehman at that time or the likes of some of the big banks right now have? It's one of the great opportunities that exists that no one ever talks about, but it's clearly indicated within the wealth divide that we see between, say, the 1% or the 10% and the rest.
Yeah, that's interesting. But you mentioned the small investor, and not all small investors have the time. I do know of one.
Right.
I mean, I know of a small investor that he's a former chemistry professor.
Okay.
And he's just made a killing over the last 20 years. He looks, what he just did? He made a killing last week on a company that was just bought by Berkshire Hathaway. Okay. He invested.
One. Yes.
He invested some time ago and he looked at this company and he made a bet.
Right.
He said, I'm going to bet that this company is going to get taken by Berkshire.
Right.
Okay. And he made a really nice, tidy sum on it.
Right.
The thing is that he is in a position that he can do that. Okay. His wife is a full professor.
Right.
They're both close to just full retirement. And so he has to do this as a full-time job. Mm-hmm. Most people don't. So they're trusting people like Peter Pham.
Right.
Okay. They're trusting people like you to have looked at all areas. Okay. And to say, yeah, man, this isn't going to be another 1994, 1995 when I had buddies that were saying, dude, you got to invest in the Southeast Asian tigers, man. You got to invest in the tigers. And then shorts,
Yeah.
And now they're saying, oh man, I wish I'd have just kept it in the tigers because it all came back. you know, that Peter be able to do that for them, just like my friend does that for himself. And that you're not omitting any variables that you're finding in the equation.
We hope you enjoyed this mastermind session. If you'd like to contact Peter Pham or Phoenix Capital, please email info@phx-cap.com.